Hi everyone, and welcome to a brand new episode. My name is Marcus, and today we're looking at Abbvie, ticker symbol Abbv. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. Should we be buying the stock? Well, let's take a look. As I mentioned, we're looking at Abbvie, and they are traded on New York Stock Exchange and are in the life and science sector. If we go down to the screen, we can see that their market capitalization coming in at $251 billion, and the revenue is at $57 billion. PE ratio coming in at 20. I like it. Now, and profit margin is at 22%. That is just amazing. I like it. So that is a go. Price to sales ratio is at 4. Normally, I like companies with a price to sales ratio of maximum 4, so having a 4.3, I understand is not far from the threshold, but it's still higher than what I normally like to take a look at, so that is a no for me. Now, price to book value coming in at 17, that is just way too high, so that is a no. So they are paying out dividends of $5.5 per share, and that is a go because I like those recurring income. Effective return at 3.9%, I like it. I would like to see a range between 3 and 6% or higher, and I believe we'll see a much better effective return as time goes on, as we are waiting the Fed report tomorrow, and I believe as they will raise the interest rates, they'll push the stock market into a decline of maybe 5 to 7%, and therefore giving us even better buying position. So having a 3.9 effective return, that is a plus. I like it. Return on equity coming in 92%. That is just amazing. Basically what it tells you is that the company's ability to create return on their equity, and coming in at 92%, that is just amazing. So that is a plus. Return on assets coming in at 8%. That is a bit low, so that is a no for me. So the stock is currently trading at $141 per share. If you go down to the moving average, we can see that we are below the 50-day moving average, but also below the 200-day moving average. Basically what it's telling us is that we might see the stock price decline. If we take a quick glance on the chart, we can see that we have been moving within a positive trend channel for quite some time, but as of lately seen the trend reverse, and now we are moving in a negative trend channel. But we'll take a closer look at the technical aspect of the stock further down. But let's head over to the income statement. What we can see here is that the total revenue went from $28.2 billion and grew to $56 billion, and these numbers have been improving year by year. That is a plus. Gross profit went from $21.2 billion down to $18.7 billion. We can see it started improve, but then fell off in 2020, but have since seen an improvement, so that is a plus. Net income went from $5.3 billion up to $11.5 billion. We can see same trend here. We fell off in 2020, but have since seen an improvement, so that is a plus. Now let's head over to the balance sheet. What we're interested in here is that the current assets versus the current liabilities, and we can see that the current liabilities are greater than the current assets. Basically what it's telling you is that if the company were to convert these assets to cash, they are not able to pay off the current liabilities. They will still be in debt. That is negative. I don't like that. So that is a red flag. And they are far from being able to pay off their total liabilities, which went from $65.7 billion up to $131. We can see that these numbers have been growing, but they did pay off in 2021, but overall trend is negative. I would like to see them continue to start reducing the overall debt. Outstanding shares went from 1.6 billion shares up to 1.8 over the last 5 years, so that is negative. So what's happening here is that they are diluting their investors by issuing more and more shares, and that's a way for a company to bring in more capital without taking on more debt, by seeing that the debt is growing rapidly, but also they're issuing more and more shares. That is a red flag, so that is a no. Now let's head over to the cash flow, and what we're interested in here is that the operating cash flow versus the capital expenditure, and we can see that there is a difference of $22 billion, which is amazing. We can see that the operating cash flow went from $10 billion up to 22.8, and these numbers have been improving year by year. That is a plus. And the capital expenditure went from $529 million $8 up to $787, and these numbers have been improving year by year. Fell off a bit in 2021, but overall trend is positive. I'm liking what I'm seeing here. The operating cash flow is improving year by year, and also they continue to invest in their business, and that is a plus. Now let's head over to the key figures, and what we can see is that the earnings per share went from $3.3 per share up to 6.5, and these numbers have been improving. Fell off a bit in 2020, but overall trend is positive. Revenue per share went from $17.6 per share up to $31.7, and these numbers have been improving year by year. That is a plus. Equity per share went from $3 per share up to 8.6. We see we fell off, but have since been better numbers. That is a plus. Dividend per share went from $2.5 per share up to 5.2, and these numbers have been improving. That is amazing, because I like those recurrent income, and also I like the fact that the income is growing year by year. So that is amazing. That is a plus. Dividend share, we can see here 77, 98, 80, 167, 80. That is negative. I like to see companies that pays out less than 60%, because I want some of the capital to remain in the business for investments, acquisition, and just overall strengthening the finances. And seeing that they are paying out more than 60%, that is a negative. That is a way to attract investors, but that also means that they don't have any capital for investments or strengthening the finances. So that is another red flag. So that is a no. I don't like that at all. Gross margin went from 75% and started improving. Then we fell off in 2020 and has since seen a better improvement. So that is a plus, that recover that. Operating margin went from 27% down to 23%. We can see here we fell off, improved, fell off again. Overall trend is negative. I don't like fluctuation, because I like companies that is easy to read and predictable. A fluctuation brings in uncertainty, and uncertainty is not good at all. So seeing that these numbers are fluctuating and has a negative trend, that is negative. Profit margin went from 18.8% up to 20.5%, and we see here we fell off and improved again, fell off and improved again, but overall trend is moving in a positive direction. But at the same time here, I don't like the fluctuation. It needs to find stability. By seeing that these numbers are improving over the past 5 years, that is a plus. Return on equity, I have to take a closer look at these numbers, and we can see here 104%, and then we fell off again and then improved again over the last year. So that is a plus. Return on assets went from 7.5% up to 7.8%. We can see here we increased, fell off, we fell off and improved again, but overall trend is positive. So that is a plus. Solidity tells you about a company's financial strength for the long term. We can see here it went from 7.2% up to 10.5%. We can see we fell off, but as of lately seen better and better numbers. So that is a plus. Balance sheet liquidity, same thing as solidity, but here it looks at the company's financial strength for the short term. We can see it went from 0.4 down to 0.2, and these numbers have been dropping. We improved a bit in 2019, but have since in lower and lower numbers. So this is negative. Debt ratio, we can see it went from 12.8. I need to take a closer look at these numbers, but have since in lower and lower numbers. So that is a plus. Basically, in 2021, having a debt ratio of 8.5 is telling you that the company had 8.5 times more debt than equity, and that is a lot. But seeing that these numbers are dropping, that is a plus. Now, guys, we have gone through the income statement, balance sheet, cash flow, key figures. Now over to our key feature, which is our stock analyzer. Basically what it does is that it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers, or have the software do the heavy lifting for you. If we take a look at the screen, we can see right away when I took this the image, the PE ratio was below 20, which is positive. The payout dividend, which is positive, and the dividend payout share is greater than 60%, that is negative. And the dividends have increased over the past 5 years, that is a plus. And the number outstanding share have increased over the past 5 years, that is negative. Revenue decreased over the past 5 years, that is a plus, and profit margin above 15%, that is a plus, and profit increased over the past 5 years, that is a plus. Current assets are less than current liabilities, that is negative. Solidity increased over the past 5 years, that is a plus. Balance sheet liquidity decreased over the past 5 years, that is negative. And debt equity ratio improved over the past 5 years, that is a plus. And the total liabilities have grown over the past 5 years, that is negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. And you can have this software along with everything we've gone through, plus access to a discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to head over to comments and become a member today and support the channel. Thank you so much. Now let's head over to the technical aspect of the stock. So here we have the chart. As you guys can clearly see that we have been moving within a positive trend channel for quite some time before we broke out of that channel and started moving within a positive positive trend line. But here since April, when the Fed started increasing the repo rate, we saw a hit, the stock market take a hit, and that is the main reason why we saw a rapid decline, and we are now moving within a negative trend channel back to this the channel we used to move within. I believe we'll continue to see the stock price decline as we see more and more central banks worldwide increasing their repo rates. So basically, for the short term or for the long term, in order to combat the inflation, there are three phases we need to see. When they increase the interest rate, we'll see it affecting the financial markets before affecting the overall economy, and then combating the inflation. So this will go on for quite some time. But so what I'm currently looking for when I look at the stock market, I want companies that are large and stable, that provides revenue, that is good on creating profits and have good finances. And I think Abbvie, what they need to do is start looking at their financials and start improving their balance sheet liquidity and their solidity. The debt equity ratio needs to improve, but also they need to find stability, reduce their operating costs, reduce the cost of goods sold. So there's a lot of work, and also reduce the amount of capital that is paid out on dividends. The payout ratio needs to drop maybe down to 20%, so they have capital left in the business for investments, acquisition, just overall strengthen the finances as we move closer within the recession. Because I believe this will the Fed or on all central banks will do everything in order to combat the inflation. And we all seen we have, for instance, war in Ukraine, we have a rapid growing energy prices, and we have supply issues and the Chinese economy. So I believe this will go on for quite some time. So I believe we will see the stock price decline, and especially for Abbvie, I believe we'll see the price move closer to the support line over here. But I wouldn't buy just to buy and hold the stock, because I would like to see a company that is stable, that I can own and have it over the many years. But Abbvie is not really that type of company yet, so therefore I will not buy the stock. So how would you trade the stock? Please let me know in the comment sections below, and I hope you have enjoyed this episode. Please give me a thumbs up, comment, subscribe, and let me know if you have any stocks you want me to take a look at and do a video on. Once again, I hope you enjoyed this one. Guys, take care until next time. Bye bye.